Good morning, everybody. We have a mixed trade in the grain markets here on Thursday morning. It is 6:33 a.m. Central Time. December corn futures are up 3/4 of a cent at 3.97 and a quarter. November soybeans down 3 and a quarter at 10.53. December Chicago wheat up 7 and a quarter at 6.04. December Kansas City wheat is up 8 at 5.43 and a quarter. December spring wheat up 7.5 at 5.53 and a half. China bought more U.S. corn and soybeans yesterday. USDA confirmed flash sales of 420,000 metric tons of corn. That's about 17 million bushels, and 264,000 metric tons of soybeans. That's about 10 million. 10 million bushels to Chinese buyers. This is the first flash sale to China since last Thursday. Chinese purchases of both crops are record high for the marketing year. So the buying continues, and the markets continue to hold together fairly well here, I guess. Weather forecasts a little bit wetter for central and eastern areas of the Corn Belt during the second half of the month. Forecasts indicate that some areas of Illinois, Indiana, Ohio, they'll see up to 2 inches of rain, maybe more locally between now and the end of the month. You've got some other areas, Missouri, Iowa, a lot of Minnesota that will see some rain, but lesser amounts in those areas. No relief is in sight really at all for the driest areas of the southern plains, and drought has been building there for months, of course, and we've talked about that extensively as of late. So a little bit more rainfall being introduced for the eastern Corn Belt. We've got our weekly ethanol report from EIA later this morning. Over the last 4 weeks, weekly ethanol output is running 6% below the same week, below the same period last year on average. So we have still not returned to pre-virus levels in terms of ethanol production, still lagging. We do have positive ethanol production margins for a lot of ethanol plants across the country. We just have not pushed production back to pre-virus levels. So, despite a lot of the good things that we've seen in the corn market, we've seen the market rally to price levels that nobody thought were possible this year. We've still got a bad situation here with ethanol, certainly. We've got our September crush report from NOPA this morning. We're looking for a number just south of 161 million bushels. September, typically a pretty slow month for processors. They do some routine maintenance ahead of harvest. Soybean demand via crush for the marketing year, according to USDA, will still be record high, or is projected to be record high, and will account for 48% of total U.S. Soybean demand this year. Wanted to talk a little bit about carry in the corn market and in the soybean market. Had some charts in my newsletter this morning. I figured I would discuss this. The corn market has been bull spreading essentially since early August. They've taken a lot of carry out of the market from this nearby December contract out to your spring and summer contracts. And then you've actually got some inversions from current prices out to, say, September 21 or December 21. A lot of people would make the argument that this is an odd action given the scenario that we have in regard to supply and demand. We're looking at a stocks to use ratio for the new crop marketing year that's going to be close to 15%, which is historically that's comfortable. It's not a tight supply and demand situation. It's pretty much the same as what we've had the last 4 or 5 years, yet we're seeing this market bull spread at a fairly rapid pace. There's probably a few different arguments you could make here as to why this is happening. One argument may be that farmers are selling soybeans very aggressively and are therefore not selling corn very aggressively. Maybe the market is trying to pull some of these corn bushels forward. Another view would be that USDA is wrong and that the stocks really aren't there, and that the crop is not quite as good as advertised, and that there are maybe some flaws in the balance sheets. In any case, this presents kind of not a problem, but presents an issue for a lot of farmers who have December sales on the books. If you've got short futures, you've got HTA contracts. In most situations like this, with this sort of carry-out projection, this sort of stocks-to-use ratio, you'd be able to roll those existing sales out to March, May, or July and capture a substantial amount of carry. That opportunity is not available here as of this morning, which certainly kind of odd in this situation. The soybean market is inverted. Your nearby November and January contracts continue to hold premiums to basically every other contract on the board. And this is more normal in this sort of situation. You've got a much tighter supply and demand situation relative to what we've seen the last few years. You've got some real strong demand, especially up front in this November January timeframe. Prior to South American harvest. So this I would say is not necessarily as surprising as what we're seeing in the corn market. The action in the corn spreads you could certainly say is odd given what we've got going on here. Whereas in the soybean market, I'd say it's more normalish. Basis should be noted. There is a difference, of course, between the futures market and the cash market. And there are some areas of the country where the cash market or the cash bids are better maybe 2 or 3 months out than they are right now. So futures prices are maybe the biggest thing to consider, but maybe not the only thing to consider when you're talking about these spreads in regard to marketing. Nearby December corn futures very briefly did trade $4 overnight. So if you had some orders working, check and see if you had anything fill. The markets, I mean, we've still got a solid technical uptrend in place. I mean, we traded fresh highs just overnight, and we're within 3 cents of those highs this morning. So despite that little correction we had recently, we're right back to the highs essentially. December 21 corn still kind of lagging, 393. Is where we're trading there this morning. We have yet to trade that $4 mark in this run. Soybean market finished higher on Tuesday and Wednesday after a setback on Monday. Same thing as with corn. I think we still got a technical uptrend in place. The spread action has corrected, but still looks good. In my opinion, China's still buying beans. Got to keep an eye on the Brazil situation. Just about every analyst, whether it be the government, U.S. government, Brazil government, private groups, everybody's still projecting record Brazilian soybean production. And they have caught some rain, and there's some more rain in the forecast for these drier areas of Brazil. The wheat market's acting really well. Both HRW and SRW futures could easily test those recent highs this week or next week. Your spring wheat market is within just a few cents of some 9-month highs this morning. Any sign of drought relief in the U.S. Southern Plains, I think, could stop this rally very quickly. Just like in row crops, crop scare opportunities, or crop scare events rather, sometimes present you with some of your best marketing opportunities as a farmer, certainly. Cattle market was lower yesterday. Fat cattle 50 cents to $1 lower. Feeder cattle more of a mixed bag. Not a whole lot in terms of cash trade. Maybe a little bit at 108. Ahead of the cash open, the Dow Jones is down 250 points. The S&P is down 32. The bonds are up a little bit. U.S. dollar is up a little bit. Crude oil is down $1.13, 39.93 in the November WTI. Remember, if you'd like some more information, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan, check out my subscription service if you would like to know when, how, and specifically I'm pricing corn, soybeans, and wheat throughout the year. Check out that subscription service. You can cancel it at any time, no obligation. Everyone have a great day. I will talk to you same time tomorrow.